Our Market Monitor guest tonight says he's looking beyond the ups and downs of the market and that he's been buying some good quality stocks this week. He's Kevin Caron, portfolio manager at Stifel Private Client Group. Kevin, so nice to have you with us here.
Thank you for having me.
So let's get right to it. Raytheon is at the top of your list. You're saying that this stock over the next 12 months can be up 18%. What's so special about Raytheon? Well,
all three of these stocks, and to lead off with Raytheon, the idea is to have very steady companies because we have now gone through a period where we've had an improving economy for 5 years now, and we just want to be thinking about how to get through the next several years, which might be a little bit more difficult at some point. So Raytheon has very good cash flow, excellent balance sheet, raising its dividend and buying back shares. And ultimately, the business is very sound. They're the maker of Patriot missiles. Geopolitically, given the instability that we have in the Middle East, it's obviously they're in an attractive spot for the products they sell in that region.
Mm-hmm. So that's sort of a bet on an unsafe world in a way.
Well, in a way, but also realize that that this is really a very steady company in terms of their underlying fundamentals. If you look at the cash flow, if you look at their balance sheet, very sound. And ultimately, what we want to do is make sure that the companies we own in the portfolio have those kind of characteristics. You
have a price target there that implies about a 20% gain. Your second choice has a somewhat more modest price target on it. Tell us about that one.
Sure. Now, if we're talking about Intel, correct?
Right.
Okay, so Intel, what we're looking at is a company that obviously is best in its class in terms of being able to deliver very low-cost, very efficient processors for computers. And even though the PC, there's been a lot of talk about the way the PC is going in terms of sales, the one thing we do know is that PCs are getting smaller. That means they need to be able to have very efficient processors. Intel is the leader in the pack in terms of being able to do that kind of work, and there's none other that I think can compete as effectively as Intel, given their size and scope. Mm-hmm. And then secondly, in terms of the server marketplace, which is very profitable, they are dominant there, and it's growing very nicely. And with trends in business spending expected to pick up, we think they do very well.
You have a healthcare recommendation, Abbott Labs, ABT, on the New York Stock Exchange. A lot of news about Abbott Labs over the last couple of weeks.
Sure. So Abbott Labs is a slimmed down Abbott Labs. They've spun off AbbVie. Now you're looking at a company that's very well diversified in terms of its product mix. They have branded generics. They have their nutraceutical business. They have medical devices. They're also diversified internationally. They have about half of their revenue, just shy of half of their revenue, coming from emerging markets, which are growing very nicely. And they're paying a decent dividend. So overall, you've got a diversified company with a dividend, with a very good balance sheet, consistent profitability, and should be able to get through just about anything the world throws at them in the years to come.
And you're saying that about all three of these stocks, that these are buy and hold, even if the markets do crazy swings over a lot of volatility over the next couple of weeks.
Yeah.
Still do fine.
Yeah. The spot that you just had about small caps, for example, that was indicative of the market over the last few years that has been very rewarding to companies that have been more exciting. That can't go on forever. So what we're thinking about is how, even though right now we see the economy growing, we see the data coming in very strong on terms of industrial sales and employment, all these things, we want to make sure that over the long term, if and when we do have a slowdown and these more consistent kind of characteristics are demanded by investors, we want to make sure they're positioned in portfolios.
Boring is beautiful, in other words, or it can be in certain markets. Very quick thought here as we end this very turbulent week. What did you make of it? What do you think's ahead?
I think a lot of what we saw this week has to do with discontinuity between the message from central banks, who on one hand are struggling to find ways to continue quantitative easing, and on the other hand,
or start it in Europe.
Or start it in Europe, yes. So you have this kind of conflict, and then you have the fiscal authorities around the world who are dialing back deficits. So one of the difficult things that we are encountering is that the economy is getting better. It's suggesting we need less stimulus, and the market so far has been sponsored largely by QE and then the taper, and now the question is whether we need to start the untaper.
Real quickly, in a word, next week, stocks up, down?
I think we're going to have a volatility for a while to come, but I don't think you fear it, because I think ultimately, as long as the data is moving in the right direction, this is a time to go and look for quality stocks to put in the portfolio.
Kevin, thanks so much for coming by. Have a great weekend. Kevin Caron with Stifel Private Client Group.